Google parent Alphabet is set to report its quarterly results after today's market close. It kicks off what you're going to be hearing from these big internet companies. And joining us right now with a preview is Barton Crockett. He is Rosenblatt Securities senior analyst. Barton, you've said that this is a scary period that we're getting into. What are you afraid of hearing?
Well, it's all about the macro and the ad market, right? So Google is the first kind of major internet ad company, and they have meaningful exposure to these China-based marketers that are about 10% or so of ad revenue at Meta, and probably a similar kind of ballpark in search at Google and also in YouTube. And the question is, with an effective embargo on imports of goods from China that aren't smartphones and consumer electronics, what's going to happen with the ad spend from people like, Shein, Temu, others? Is that going to fall off? Is there going to be some broader concern as companies are looking at supply chain potential disruption? And Google doesn't guide very specifically for the next quarter, but they'll give us some sense of tonally whether things are looking better or weaker. And right now, I think there's a lot of reason to be concerned about the gyrations in the ad market.
We were talking earlier today about Chipotle and how they have seen a drop in customers coming in for some of these things and their willingness to pay for some of those issues, too. They missed on same-store sales. The analyst that we spoke with earlier, the investor we spoke with earlier, suggested that Chipotle would need to do things like increase their ad spending to try and make sure people are continuing to come into the stores. Is there a chance that all of this chaos actually leads to better numbers in the short term?
Yeah, certainly there will be situations, but I do think that in aggregate there's a very strong relationship between ad spend and what's happening with nominal gross domestic product, and if that's pressured, if certain key categories like autos, because of supply chain, like China, because of embargo, are pressured, you'll see that, you'll feel that, and Google will, I think, at some level have to touch on that on the call. Now, the flip side of that is things are so volatile, right? I mean, marketers may be trying to look past that. And I do think at the end of the day, what this administration is likely to do is push hard for trade deals, but not so hard that they wreck their chances in the midterm. So, I think that the economy, there's a limit to the disruption that they'll put forth, and marketers might try and look through that.
What are you thinking in terms of what you tell people to do with this stock ahead of the earnings release that's coming out? I mean, there's been so much other news, antitrust issues related around this, too. What's your overall take?
Yeah, look, I mean, we're not of the mind that you need to own Google into this print. Look, there's a lot of great strengths at this company. We do have a neutral rating, but we do notice that the valuation is getting pretty low as the stock comes down, and there will be a day when the ad market will stabilize and will recover, and these guys will continue to have great kind of strengths in artificial intelligence and cloud. So we tell people, sit back, let's see what happens this quarter, and then let's reevaluate.
Okay, Barton, what you expect to hear from the others as well, or is this the kickoff that you will determine what you think about every other stock in your universe based on this?
These guys are going to tell us the tale. What Google is seeing is going to be similar, I think, to what you're going to hear from the others, Meta, and to a degree, Amazon. So, this is the introduction to what's, I think, going to be a pretty volatile couple of weeks of earnings.